All right, Karthikeyan Natarajan, Executive Director and CEO with Cyient joins us now. Let's take a conversation forward with him. Karthik, good morning. Thank you for joining us. I'm going to first start with the broad concern in the market. The broad concern in the market is US economy is on the brink of a recession. Europe is in a recession. Historically, when that has happened, IT companies have suffered in the past. Today, IT companies are putting a brave front out and they are dismissing all the growth concerns, but it's a matter of time they'll be forced to acknowledge it. How would you dismiss this apprehension in the market? Right or wrong, truth or a myth? Let's discuss.
Sure, I think it's a fair thing to say that I think the global economy is in a tailspin. But having said that, it is also interesting to understand any technology investments from our customers is deflationary in nature. So if they are really looking for improvement in their cost scenario or cost efficiencies, I think technology investments are the way forward. I think this has been proven time and time again in the last 20 years, whether it is way back in Y2K or what happened in GFC crisis or what we have seen during the pandemic. I think all these things have proven that this industry is resilient, have come out stronger, and technology is going to be the defining a pivot for this whole decade. We call this decade as decade, and all this will probably help us to maneuver this challenges much better than what happened during the pre 2000 era.
Is that in your interactions with the client, with the outsourcing officers you deal with, the CTOs, largely chief technology officers, nobody is even dropping a hint that they want to cut down on IT spending?
No, we deal with engineering and R&D spend, what we call them as a tech spend. And if you really look at it, it is essentially not a broad-based way of what you talked about, but there will be some minor corrections that would be required in terms of the discretionary spend that need to be curtailed where it's necessary. But at the same time, the long-term, the medium-term trend appears to be strong. And what started off as a change in the form of cloud adoption over the last 5 6 years and driving the digital transformation enabled through 5G and various other tech disruptions that are happening. I think the investments that are required to sustain their businesses, improve their efficiencies, drive the revenue growth, I think technology investments are irreversible.
Good morning. So that's the conversation as far as the clients go, where you're saying maybe some minor tweaking is going to be required. What about the retreat of the US dollar index? What is going to be the impact of that? And given the larger context of, the recessionary commentary that comes in from the US and Europe?
Yeah, what we have heard from the US customers, there could be a mild recession, they're calling it as. And this also would help them to manage the supply chains. If you look at last 3 years, what happened, and there were big challenges on the supply chain. It was completely disrupted. And some of the customers were saying to the extent of 20% of their revenues were impacted due to lack of supplies that they needed while the demand was robust. So this 4 to 6 quarters would help them to stabilize the supply chain better, and they would be in a position to get back to the growth trajectory. The scenario in Europe is slightly different, and especially if you look at Germany and UK, are likely to see some challenges, and especially how they're going to manage the winter. And in Germany is going to be critical. And the energy security is becoming a cause of concern, and the new investments on energy are likely to grow out of proportion. And some of the areas that they need to invest around the sustainability, climate change, I think they are robust for the long term. So they are trying to balance out what they need to do for the short term, how they really need to continue to make investments that are necessary to stay afloat in the long term, keeping the mega trends in play.
So then against this backdrop, can you explain to the ET Now viewers, your retail investors, shareholders, that given all of this, what you're saying as well, the macros, the conversations you're having, how is it that you have guided for a margin improvement of as much as 350 basis points over the next 4 to 6 quarters?
Yeah, I think we wanted to take a look at some of the structural changes that we wanted to make, whether it is about our on facilities and our hardware, software, and how do you think we really want to really be smart about it. And with virtual workspaces, that is going to be a possibility. with work from home, and how do you think we really want to take this into account, and also some of the efficiencies that we want to bring in. And as we announced about 3 acquisitions in the last 2 quarters, and keeping this in mind, we genuinely believe that this 3 to 3.5% improvement over the next 4 to 6 quarters is possible, and which is going to create a sustainable margin levels for us to continue.
Mr. Natarajan, hi there, morning. I want to shift focus and talk about the announced plans of divestment in the DLM business. Have you finalized what route you're going to take? Would it be a spin-off, an IPO, or some sort of a partnership with a strategic investor? Because it's been some time since the plan had been announced. And a follow-up, will you confirm whether you would still hold majority or would it be a complete exit?
No, we have not finalized the options out of all the things that you talked about. And our intent is to have a clarity by end of this financial year. And we are working with the board and with various options that we are considering. And we would let you know once we finalize which option would be best suited for our shareholders. And we would let you know once the decision is made and approved by the board.
On whether or not acquisitions will continue?
I think it would be very focused in terms of where we think we need to really strengthen our portfolio. And if you look at, we made some acquisitions on the energy or sustainability area through Cyient. I think that we believe is one of the strategic growth lever for us, and which also helps us to diversify our portfolio and into long-term investment that are going to happen on the energy segment. And if you just look at the process or plant engineering related spend, led by the energy transition, is going to run into $2 to $3 trillion over the next 20 years, which is as big a spend as what happens on the product engineering and R&D. So that's a level of opportunity that we get to play in. And we would also be selective about whether it is automotive or medical healthcare areas. And we would be very focused on some white spaces that we feel would need to fill in over the next 4 to 8 quarters, depending on the opportunities that we get to work with.
Right. Great to have you on the show. Thank you so much for taking the time out and explaining us what really is the reality of things on ground and where things are shaping up. Mr. Natarajan, good speaking with you as always.
Thank you so much for getting me into this show.